Greetings. Welcome to the NextNRG third quarter 2025 earnings results conference call. At this time, all participants are in a listen-only mode. After today's session, we will conduct a question-and-answer session. If anyone should require operator assistance during the conference, please press star zero on your telephone keypad. Please note this conference is being recorded. I would now like to turn the conference over to Sharon Cohen, Investor Relations. Thank you. You may begin.
Thank you, and good morning, everyone. Joining us today are Michael Farkas, our Chief Executive Officer and Executive Chairman, and Joel Kleiner, our Chief Financial Officer. Before we begin, I would like to remind you that certain statements on this call are forward-looking in nature and subject to risks and uncertainties. These statements are based on current expectations and assumptions and involve risks that could cause actual results to differ materially. Please refer to our filings with the SEC, including our most recent Form 10-K and our Form 10-Q for the quarter ended September 30th, 2025, for a discussion of these risks. With that, I'll now turn the call over to Michael.
Thank you, Sharon, and welcome everyone to our third quarter earnings call. This quarter represents a significant step in NextNRG's journey as we continue advancing towards our vision. Our results clearly demonstrate that our strategy is working. Revenue is growing, margins are expanding, and our mobile fueling and energy infrastructure initiatives are driving strong, measurable results across the business, making this our strongest financial performance to date. The results speak for themselves, and they set the stage for continued growth and operational excellence. I want to thank all of you for your confidence and take this opportunity to provide an overview of NextNRG. We're more than an energy company. We're a full-spectrum energy partner. From generation and storage to optimization and fueling, we give businesses the tools to be efficient, independent, and future-ready. Our ecosystem combines power generation, advanced batteries, wireless EV charging, and on-demand mobile fueling to deliver energy wherever it's needed, smarter and faster than ever. We're not just following the energy transition, we're leading it. The momentum we've built continues, and as you'll hear today, the investments in our past initiatives are now delivering tangible results. Last quarter, I discussed our investments in expanding the fleet by 99 trucks and entering 10 new markets. You'll recall it was anchored in a strategic thesis that building operational density around our strongest customers will allow us to 1. Optimize routes, 2. Enhance driving efficiency, 3. Expand margins, and 4. Extend market presence off the heels of our largest customers. I'm proud to share that we are delivering on that vision, achieving our highest revenues and strongest margins to date, marking the best performance in the company's history. In addition to the above, we have added an 11th new market, Fort Myers, Florida. As we've grown and are increasing gallons delivered, we've been able to unlock volume-based supplier discounts, increasing profit margins from 8 to 11% and driving a 232% year-over-year revenue increase. Moving on to our emerging technologies, particularly our smart microgrid and battery storage solutions. We previously reported that we were working on various projects, including the California healthcare facilities, and I'm happy to report that we have just signed 2 power purchase agreements, also known as PPAs, whereby we effectively replace the traditional utility provider, supplying these locations with their full energy needs. Our systems are addressing a vital need, ensuring facilities remain efficient, compliant, and operational around the clock. Most notably, these PPAs provide for 28 years of contractual profitable revenue to the company via energy sales, creating long-term revenue visibility. We continue to advance our energy division's pipeline, driving meaningful progress across multiple fronts. As NextNRG evolves, our strategy is to be increasingly focused on high-demand sectors where reliability and resilience are non-negotiable, particularly healthcare, assisted living, and large-scale commercial facilities that require continuous mission-critical power. This approach has unified the company around a more focused sales approach within a massive TAM. Our active pipeline currently stands at over a dozen projects, with several more qualified leads progressing through the pipeline. As time progresses and the market learns about NextNRG, we're watching our integrated energy ecosystem come to life. As an example, we've been approached by solar installers who have deployed solar power generation solutions, but whose clients now require battery storage and/or charging solutions, and the technology to optimize their energy generation, storage, and usage. NextNRG is being asked to complete the energy ecosystem into a single intelligent platform. This growing interest validates our approach and reinforces the competitive advantage of our integrated energy model. As interest in our platform grows, we're strengthening relationships across the value chain, expanding partnerships in solar hardware and battery storage to deliver cutting-edge technology at highly competitive pricing. These collaborations enhance our offering and position NextNRG as a trusted, full-service energy partner. Next, our much-anticipated bidirectional wireless EV charging initiative continues to advance. This quarter, we continue to make meaningful progress in the development framework and are moving closer to the launch of our first demonstration of this game-changing technology. While still in the planning and design phase, the groundwork is being laid now, positions us to move efficiently into the execution as we refine partnerships and tech integration. We hope to provide a material update in the coming weeks. Looking ahead into 2026 and beyond, we find ourselves excited for the future, a time when global and domestic energy demands are reaching unprecedented levels. I recently attended a conference where business and political leaders convened, including President Trump and Eric Schmidt, the former Google CEO. They underscored the urgent need to expand our nation's capacity in energy generation, storage, and distribution. They specifically mentioned the growing trend for developers of data centers and other energy-intensive sites to develop on-site, fully integrated smart grids to ensure power reliability. The message was clear. Our current infrastructure cannot keep pace with the accelerating demand. In fact, following the conference, I was invited to an intimate dinner at Eric Schmidt's home with a group of leading business executives in America, and as I discussed what NextNRG was building, the focus quickly became on nation's need for power generation, storage, and distribution. To quote Eric, "We will run out of power before we run out of capital to invest in AI infrastructure," underscoring the urgency to generate power. NextNRG is uniquely positioned to help address that challenge. Our integrated approach spanning generation, storage, distribution, and fueling places us at the forefront of providing the critical energy solutions needed to power the next era of growth. Our strategy remains focused on expanding, scaling, and optimizing. We are deepening our presence in key markets with mobile fuel delivery, advancing opportunities in renewable distributed infrastructure, and strengthening partnerships that accelerate technology deployment while improving operating efficiency and margin performance. While our near-term focus is on disciplined execution, our long-term vision remains steadfast: to create a fully connected energy ecosystem that bridges today's fueling needs with tomorrow's clean, intelligent infrastructure. As CEO, my goal is consistently to transparently articulate our current performance while also painting a clear picture of our commitment to disciplined growth and to deliver on our commitments. I am proud that all the things we laid out in last quarter's call, we have delivered. I hope to do the same next quarter, consistent and reliable leadership. With that, I'll turn it over to our CFO, Joel Kleiner, for the financial review.
Thank you, Michael. Turning to the financials, Q3 was another quarter of outstanding growth, with a revenue of $22.9 million, up 232% year over year from $6.9 million in Q3 of 2024, and up $19.7 million in Q2 2025. To put that in perspective, our total revenue for the full year of 2024 was $27.8 million. So we're approaching nearly a full year's worth of revenue in just one quarter. Gross profit margins also continued to expand, increasing from 8% in Q2 to 11% in Q3. Not only did we grow revenue, but we also successfully lowered our cost of goods sold, demonstrating that while growing top-line revenue, we're also simultaneously improving our operational efficiencies. On the expense side, our loss from operation came in at $9 million, which includes a $5.6 million non-cash stock-based compensation charge. As you recall, we introduced this program last quarter as a strategy to attract and retain top talent. And as expected, this quarter's charge is significantly lower than Q2. Excluding this item, our operating loss was $3.4 million, down from $5.2 million in Q2, reflecting our continued focus on disciplined cost management and operational efficiency as we move closer to profitability and positive cash flows. Cash used in operations for the first 9 months of 2025 was $14.1 million. Because this figure reflects quarter-end working capital timing, including inventory and prepaid expenses hitting just before quarter close, as well as Q2 invoices being paid in Q3, the reported number overstates our underlying burn rate. On a normalized basis, our year-to-date operating burn is closer to $11 million. We ended the quarter with roughly $650,000 in cash, which similarly reflects those working capital timing dynamics. Since quarter end, we have taken deliberate steps to strengthen liquidity. We completed the refinancing of our truck fleet and continue to streamline our debt profile, converting portions of our debt to equity and reducing the overall complexity in the capital structure. These actions provide greater financial flexibility as we manage the business. Operationally, Q3 delivered solid progress. Revenue increased, our energy pipeline continued to expand, and we began advancing several opportunities towards deployment. As we scale revenue, expand margin, and enhance operational efficiency, the underlying trend in our cash usage is moving in the right direction. While we still have work to do ahead of us, the trajectory of our business, combined with the strength of our platform and the early validation we are seeing across both fueling and energy infrastructure, position us well for continued momentum in the quarters to come. Thank you. Back to you, Michael.
Thank you, Joel. It's been a fantastic quarter for NextNRG. On our last call, we outlined a series of goals that we sought to achieve, and I'm proud to say that we've executed on every single one of them. Our operational performance, project pipeline, and financial results all reflect the disciplined growth and momentum we've been building towards. Looking ahead, we're excited to be in a unique position, both in time and in capability, to help drive the future of energy across the nation and ultimately on a global scale. On our on-site infrastructure continues to expand, our pipeline is growing, and profit potential continues to strengthen with each passing quarter. And on a personal note, as many of you may know, I've spent much of my career pioneering advancements in EV charging. I'm pleased to share that I'm no longer under any non-compete restrictions, which opens the door for NextNRG to participate fully in all forms of EV charging, both wired and wireless, and to pursue high-value, high-margin energy assets that align with our long-term vision. We're just getting started, and the opportunity ahead has never been greater. Thank you all for your continued confidence and support. Operator, we can now move on to the questions.
Thank you so much. I understand there are some emailed questions, Sharon, so I'd like to hand the call back over to you for the Q&A portion.
Thank you. Yes, I've gathered some submitted questions, and then we'll now direct them to you, Michael. The first question relates to our energy division. Can you give us more detail on the kinds of projects currently in your energy infrastructure pipeline? What types of facilities are engaging with you, and what solutions are they looking for?
Absolutely. Our pipeline today includes projects for municipalities, as well as a large range of commercial facilities. These opportunities span everything from literally layering new components over existing infrastructure to full greenfield build-outs, really depending upon the need of the facility. These customers are typically asking for 3 core components. One is on-site power generation, basically to reduce dependence on the grid and improve overall reliability. Number 2 is advanced battery storage. This is to ensure continuity of power, especially during peak demand or outages. And then we're looking at our smart microgrid control system. It's optimized on how energy is produced, stored, and consumed in real time. Many of these facilities are operating with aging equipment and insufficient backup systems. So they're looking at us to design modern methodologies and integrated solutions that meet both operational requirements and regulatory standards. We're also seeing a growing wave of commercial operators who have solar installed, but now need storage and intelligent controls. And they want a unified platform that ties everything together in one simple place to be able to follow everything. They also want a single partner to complete that ecosystem. You can't have different components, different people all over the place. It's not a sound system. And that's exactly what our energy platform does. It allows the integration of all the stuff. So these are not exploratory or one-off engagements. They're well-defined, high-value infrastructure deployments that directly address the reliability gaps that are out there today. Next question.
Sharon, could you check if you're self-muted, please?
Yes, sorry about that. Our next question relates to the margins reported. Michael, the company delivered the strongest margins in company history this quarter. How sustainable is this improvement? What are the main drivers of further margin expansion?
Joel, you want to grab that?
Sure. Thank you, Sharon. Can you repeat the question? Sorry.
Yes, absolutely. How sustainable is this improvement in the margins, and what are the main drivers of further margin expansion?
So our margin expansion this quarter is absolutely sustainable because it's tied directly to structural changes in the business. As we build density around our anchored customers, we're optimizing routes, improving driver efficiency, so reducing one of the greatest components of cost of goods sold, which is the actual driver expense. And the other side is increasing our gallons delivered, which we have a great contract with where we're finally unlocking volume-based discounting. Both of those lower our per unit costs. These improvements are not a one-time thing, as we're continuously working towards better utilization, improved scheduling, and continued vendor site advantages. We expect these to continue to grow as we continue expanding our business.
Well said, Joel. Thank you. Our next question asks to discuss the conference that you attended, Michael, where leaders emphasize the urgent need for more power generation and infrastructure. How does this environment impact NextNRG?
The message from the event and then the follow-on dinner was very, very clear. Energy demand, especially tied to AI, data centers, electrification, is growing faster than the grid can support. When Eric Schmidt said that we will run out of power before we run out of capital, it underscores the scale of the opportunity. NextNRG is positioned exactly where the market is heading: on-site power generation, storage, and smart distribution, all integrated into a single platform. As developers, operators, and corporations increasingly look for reliable, scalable, off-grid or grid-enhancing solutions, the demand for smart microgrids and distributed infrastructure only intensifies. We're aligned with that, and we're already seeing the benefits in the pipeline for customers who need these kind of services.
Thank you. And our final question is about operating losses. You've made progress reducing your operating loss this quarter, but you're still running at a multi-million-dollar loss. Can you lay out a clearer timeline or framework for when investors can expect sustainable positive cash flow?
Absolutely. The improvement this quarter was driven by both scale and tighter cost discipline. Revenue grew materially, massively. Margins expanded, and our underlying operating loss improved from Q2 to Q3. The path to positive cash flow is tied to three things: continued revenue growth, which we're seeing, further margin expansion as operational density increases, and maintaining disciplined SG&A spend as we scale. The remaining hurdle is simply timing. As more new markets mature and as supplier discounts continue to strengthen, the economics improve quarter by quarter. We're not guiding to a specific date today, but the trend is clear. Our losses are narrowing, our margins are expanding, and each quarter brings us closer to sustained positive cash flow. The fundamentals are moving in the right direction, and the model scales efficiently as we continue growing. Thank you.
Thank you so much, ladies and gentlemen. This does conclude today's teleconference. We appreciate your participation. You may disconnect your lines at this time.